you ready, Steve? Andy? Yeah! Bert? Well, all right, fellas. Well, let's go!
You're listening to CFRN, the Christian Financial Radio Network.
Good afternoon, traders, and welcome back to the CFRN E-Mini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things E-Mini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro. Joining us today, Mr. Michael Borth. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon, welcome back. Today is Friday, 21st day of May, 2021. Thanks so much for joining us. Whoever you are, wherever you are, we're just glad to have you right here, right now. If you can't see the screen I have up, go to our homepage at cfrn.net. On the right hand side of the page, click the big microphone, follow the instructions. You'll be registered in about 30 seconds, and that will give you one-click access to the show each and every day. On the days you're out of the office, away from your desktop, point any internet connected browser to cfrn.net/live. There you'll find a live real-time simulcast of the show as it unfolds. You just won't have access to the chat box. We also stream live during the broadcast on our YouTube channel, which is youtube.com/CFRN. Not only do we broadcast live, but we archive each and every daily show. Currently, there's over 1,700 daily live broadcasts archived there for your viewing and educational pleasure. Let's open with a word of prayer. Heavenly Father, we thank you for your blessings, for your mercy, and for your grace. We place our work and ourselves into your hands. We ask that you would anoint our creativity, our ideas, our energy, so that even the smallest task may bring you honor. God, when we're challenged, we ask that you would guide us. When we are weary, energize us. May the work that we do and the way that we do it bring hope, life, and courage to all with whom we minister to in this organization. We pray that you bless our administration with wisdom and discernment, and all of our members with commitment and compassion, courage and strength. Rooted in your love, may your face illuminate everything we do. In Jesus' name we pray. Amen. Amen. Happy Friday. I hope it's a happy Friday wherever you are. Let me give you the numbers from around the world. These are the cash markets, or the indices as they're called. Starting here in the U.S., the Dow's up 219 points. NASDAQ down 33. S&P 500 up 8. And the Russell 2000 up 16. In the commodity basket, crude oil up $2.02, trading 63.96 last. That's a gain of 3.25%. Gold down $5.70, trading 1876.20 last. Silver down 56 cents, trading 27.50 last. In the Asian markets at the close, Nikkei posted a gain of 219 points. Shanghai fell 20. The Hang Seng rose 8. And in the European markets at the close, FTSE down 2 points. The DAX gained 67. And the CAC rose 42. All in all, some pretty light trade around the globe. It's a mixed day in Asia, mixed day in the UK, and it is a mixed Radio Friday here in the US of A. We got three of the major indices in the green: the Dow, the S&P, and the Russell. But the Nasdaq is putting the drag on the markets, down 33 points on the session. With that, we'll go over to Michael and get a recap of what happened in the live training room this morning. After that, I'll come back and we'll go over the concierge trade alerts, the Logic 247 alerts, all that, and answers to your questions. Just put them in the chat box. Michael, I can see your charts. I can see your screen.
Here we go.
So it's all yours.
Got it. All right. Good afternoon, everyone. Today's Friday, the 21st day of May, 2021. If you've not taken a free trial with us, go to the homepage at cfrn.net. On this page, all you need to do is scroll down to right here where it says free 5-day trial, no credit card required. Click on that. It's going to bring you to this page, eminitrainingschool.com. On this page, all that we ask for is your name, your email, and your phone number. You can tell us your biggest trading challenge so we can tailor one-on-one training just for you. Okay? Once you do that, hit the send button. After you hit the send button, you'll be sent a confirmation link. You must click on the confirmation link. All right? If you don't click that confirmation link, we don't know that you took the free trials. You got to do that. All right? Recaps, the spreadsheet. If you're going to read the spreadsheet, you got to read all the CFTC risk disclosures down at the bottom. Today, as I said, is the 21st day of May, 2021. We made 8 ticks in crude, 28 ticks in gold, and 12 ticks on the ES. Put us at plus 510 on the morning session. Today it took 7 minutes and 1 trade to get to the goal for the day. At that point, we're up $100 a contract, and we took a total of 21 trades. So on the month now, we're at $8,217. That's over 15 trading days, averaging $547 per contract per 2-hour trading day. On the year now, we've gotten our goal for the day on 96 out of 97 days, and that puts us at $71,250 a contract. That's over 97 trading days, averaging $734 per contract per 2-hour trading day. Okay, now let's get into what we did or didn't do. We'll start out with gold. Yeah, we'll just start out with gold. We had most trades on gold, but we'll start out with that one. Okay. Right here, gold had, it started out kind of slow right here at the very beginning, and then I started to look at an email for a second, and I missed this whole move down. Now, we didn't get a trade set up in here, but we did get one there and one there. Okay, and then a follow-up one there. And then you see gold was just going down, down, down. And eventually it started to pull back a little bit. And on this pullback right here, we grabbed a long opportunity. This was a bounce off the BBC type long. And this very first one, we picked up 12 ticks on that one. I'm sorry. Then we stopped out right after it, giving back 8 ticks to put us at plus 4. Excuse me. Then we went from plus 4 right here. We picked up 9 ticks to put us at plus 13. Then 4 more ticks to put us at plus 17. Missed a trade there. Got 1 tick there to put us at 18. 10 ticks there to put us at plus 28. Then we stopped out right there, put us back down to 20. Picked up 8 more there to put us back at 28. And we had 1 break-even trade here toward the end of the session. Now you can see gold was acting pretty well, getting to the levels, or getting very close to the levels that I was looking for. While we were in the trades, it was behaving pretty well and doing what we were anticipating it should do. It ended over here during the break. Let's see, there was a long opportunity here. We hit this level. This was the pullback level. It came down, tapped the pullback level. Then it had already hit this level once. It ran past that level. I thought it was going to go past it. And it went past it and stopped, came back down, gave a shorting opportunity here that would have been a break even, and spun around and didn't give anything. Okay, and that was it on the gold. The crude oil, you can see our last trade on crude was this stop out. But we started out here with crude. It looks like we got 1 tick profit there, then 2 there to put us at plus 3. Then something here that I didn't register, then 7 here to put us at plus 10. We missed a trade there that went up and hit that level. Now this level here, I was looking for it to get to, and it didn't get to it till way over here, like almost an hour later. It was an hour later. But I was looking for it to get up to that level. And then I had all these levels that I was looking for it to get once we started in here. But right here, it looks like I had a break even, maybe plus a tick. But anyway, I didn't register it. So at this point, we had a break even here. That put us at plus 8. Okay, and then we started to get into the break. During the break, there was not really anything that you could do. Really, there was nothing you could do there during the break. Okay, now the ES. The ES was choppy for a little while today. So we stayed away from it. Now I was given the levels that I thought it should get to, but it wasn't giving us the trade setups to get there. However, this is where we got our first trade of the day, right here, and where we got our goal on the first trade of the day. It was right here. I gave those couple of levels that went through them. Then it just got really choppy in here, and there was nothing that we wanted to do right here. So we were plus 8 at that point. We got 2 more there to put us at plus 10. Then we had a break even, another break even, plus 10 to put us at plus 20. A break even, and then a stop out that put us at plus 12. Okay. We had a trade we missed there that would have been profitable. And it was just really choppy. I was putting in levels down below here that it should get to. We had a break even trade there. Then again, a lot of chop and really nothing I wanted to trade. Finally, we get over here toward the end of the session. I was putting in these levels as it started going down. I had this level here, but we didn't have a trade setup. Then I was looking for a trade setup to get into it for this level, but it went straight to that level. Looking for a trade setup again to get to this level, but it went straight to that level. Then I had highlighted this level, which at the time seemed like it was going to be just a little too far out there, but the way it was just dropping straight down, it went there. And there was one trade setup right here to get into that. Now, we had already shut down for the morning, but it was right there. We could have picked up a little bit. During the break, there was one trade right here during the break, and that was pretty much it. So in there with plus 12 ticks on gold. We stopped out on every market at least once today. So it wasn't an easy day. It was at the very beginning. And well, the only easy day is yesterday, right? Here we go. If you're going to read the spreadsheet, you got to read all the CFTC risk disclosures down at the bottom. Today is the 21st day of May, 2021. We picked up 8 days. 8 ticks in crude, 28 ticks in gold, and 12 ticks on the ES. Put us at plus 510 on the morning session. Today, it took 7 minutes and 1 trade to get to the goal for the day. At that point, we're up $100 a contract, and we took a total of 21 trades. On the month now, we're at $8,217. That's over 15 trading days, averaging $547 per contract per 2-hour trading day. On the year now, we've gotten our goal 96 out of 97 days, and that puts us at $71,250 a contract. That's over 97 trading days, averaging $734 per contract per 2-hour trading day. Okay? Now, if you have not taken the free trial with us and you want to, you can go to the homepage here at cfrn.net, and right here it says free 5-day trial, no credit card required. Click on that. It's going to bring you to this page, eminitrainingschool.com. On this page, all that we ask for is your name, your email, and your phone number. You can tell us the biggest trading channel so we can tailor one-on-one training just for you. Hit the send button and you'll be sent a confirmation link. You must click on that confirmation link, okay? If you don't click the confirmation link, well, you won't get a free trial. So you must click on that confirmation link. All right. All right. That is it. With that, we can pass it back to fabulous Phoenix, Arizona, in Studio A, overlooking South Mountain, America's largest city park. Dwayne, if you are ready. John, are we in November beans yet? The November beans are the best ones usually.
Okie doke.
Okay.
I'm ready.
Excellent.
Okie doke. A recap of the recap.
Today it took 7 minutes and 1 trade to get to the goal for the day. At that point, we're at $100 a contract.
Good job. Once again.
Thank you.
Alrighty. Alright guys, we're going to jump right over to the daily chart of the S&P, because we've had a change in direction. We had some windows of opportunity overhead on the S&P, which did not get filled. Price is now back below the BBC, and it's approaching this weekly trading zone at 4152/53. When price drops to the weekly trading zone, we expect that to be good support until proven otherwise. If we get below 4152, then we will have a big window of opportunity to work with down to the next weekly trading zone, which is at 4125. And Valerie's finishing up the recap of the logic alerts, so let's go ahead to the daily chart. Now, where did we run into trouble today? We opened last night and we built a nice green candle all the way up to 4185. We've been talking about this triple top here on the daily chart for the last few days. Let me just refresh this chart. There we go. Okay. We talked about this triple top and the difficulty the market would have getting through that area once price attempted to move higher. The all-time historic intraday high at 42.38 was put in on May 10th. The all-time historic closing high put in on May 7th at a price of 42.2675. So true to form, price ran right up into the resistance area. It managed to take it out by just a few points, and we're always very suspicious of any new high or new low that only manages to hang in there for a couple points, a couple ticks. And so that resistance area held. It's pushed us back down now to below the session, and we're sitting right on top of the 24% Fibonacci price retracement of the last leg up. The last leg up started on March 25th, and the high was put in on the 10th. We got a retracement all the way back to the 50% fib of the last leg up. That gave us a very nice bounce, which put in this swing high at 78.25. Following day, that resistance held. We took it out by 2 ticks, 41.7875. And then the next day, 41.7950. When again you get a new swing high or swing low of just a few ticks or just a few points, until the market really proves itself, you have to be suspect. And so now we've come right back down to the daily BBC and the 24% fib. Either one of those alone we would expect to be potentially good support. The step line's also in the mix. We do have a bearish cross here on the daily chart. So if price trades below the BBC, then we look for price to head back down to the 38% fib, which is where we caught our last bounce. If the 38% fib doesn't hold, then we've got the low here of May 19th at 40.55 half. If that doesn't hold, that brings us back to the 50% fib and the low at 40.29 and if that low fails to hold, that brings us to the 62% fib, which lines up with the 24% fib of the entire move up, which began November 2nd. From November 2nd, we've been in an uptrend on the daily chart right up until this high. We had a couple pullbacks along the way, but the trend has been up. Has the trend come to an end? Well, we're going to find out here in the next couple days. If price again gets below the BBC, we'll be looking for lower prices. As long as it can hang on and stay above, then we continue to look for higher prices. So on the 30-minute chart, The S&P is coming into potential support at the weekly zone, 4152/4153. And the recap just came in, so let me format that for this chart, for this page, and then I'll drag it up and we'll take a look at it. We are in week 146 of Logic 247. That's our around-the-clock Emini alert service. The alert channel opens Sunday night at 6 p.m. Eastern and remains open around the clock till Friday afternoon at 5 p.m. Eastern when the global markets close. So far this week, week 146, as of 12:15 today, we've issued a total of 46 alerts. 3 of those never triggered. Still waiting on the results of 2. We've had 41 actionable alerts. 10% stopped out based on not risking more than $300 per contract per trade, less when possible, based on market structure and a simple 3-step methodology that we teach all of our members. Along with the logic alerts, we have the concierge trade alerts, which look a little something like this. Now, these come out once per session. The numbers are good for the entire session. This is forward guidance for the entire session. The CTA, concierge trade alerts, you can think of those as sort of a daily trading zone. Everyone's familiar with the weekly trading zones and how price behaves around a weekly zone. Consolidation, rejection, and the slice. Those are the only 3 things that happen at a weekly zone. Price behaves similarly at the CTA, or daily trading zone, if you want to use that terminology. The best way to handle the CTAs is, once they're published, you go put a couple lines in the sand, just as you see here on the chart. Long side 41.73, short side 41.25. Now, once this is posted, and it was posted last night at 6:45 p.m. Eastern, 45 minutes after the session opened, if price starts trending towards 41.73, then we're bullish, and the logic strategy will start looking for opportunities to buy the market, looking for higher prices. If price starts trending towards 41.25, which it will be if we take out this weekly zone at 52/53, then we start looking for opportunities to sell the market or sell the rallies on the way down. And so just put lines in the sand for each of the markets that you trade, and then your chart will look a little something like this. I use green for the long side and red for the short side. Now, the concierge alerts and the logic alerts, they sort of work hand in hand. And I'll give you an idea exactly how that looks. So we got a stop out on the Dow, a couple that we're still waiting on, S&P and the Russell. That's where the market failed to get up and trigger these windows of opportunity. The short on the NQ, that fell through, that worked out. And this is a long on the Russell, and just so you know how to understand the alert, this is alert number 7,459. The Russell, B is buy, S is sell, T is initial target. So on a long, the second target is labeled potential resistance, third target potential resistance, potential resistance, potential resistance. The final trade to target on every long alert is the weekly zone overhead, and every final trade to target on a short is the weekly zone below. And so these alerts are available for anyone that's on the trial to scroll through, take a look. There's 146 weeks of history here, and Each day, every alert meticulously recapped, so you can go through and see exactly what happened on each and every one of them. There are occasions when there will only be one target, when we're right up against the weekly trading zone. The initial target is always $100 per contract, except for the NQ because of its volatility. The initial target is $200. And so this was the first alert that came out last Sunday night at 6 p.m. Eastern. The time you see here is Pacific. Telegram, which is the messaging client we use, reads the clock on your computer. So whatever time zone you're in, that's what will be reflected in your Telegram window. Last week, which was week 145, markets were extremely kind. We had a total of 67 alerts, 2 never triggered, gave us 65 actionable alerts, of which 5% were stopped out based on not risking more than $300 per contract per trade, less when possible, using that simple 3-step strategy. So if you want to grab a screenshot of the CTAs, I'll drag them back up on the screen, and you can do that, and then we'll walk through the charts real quick. Been a bit of a quiet session so far. So there you go. 5, 4, 3, 2, and 1. Okay. So on the S&P, now this vertical line separates today from yesterday. And so even though this green line extends all the way back, that was not the CTA for yesterday. That's the CTA for today. So the CTA numbers that you see on the screen on each of the charts, that's just for today's session. And so price is below the VBC, so we anticipate lower prices. As we approach the weekly zone at 4152/4153, we expect that to be good support. If the support holds, that will give us an opportunity to trade on the long side. If the zone fails to hold as good support, if we trade below the zone, if we have a candle that opens and closes below the zone, then we'll be looking for an opportunity to be short down at the CTA, possibly beyond. Now this bullish cross that led to the entire move up. When price revisits that area on the first move down, we expect that to be good support. And about 80% of the time, that is exactly how it plays out. 20% of the time, it'll fly through it like it's not even there. So from 4173 up to the high at 84.75, basically a 10-point move at $50 a point at $500 per contract traded. And so from we were in a downtrend going back to the 18th, we had a bearish cross that brought us down through this logic 247 alert at 74.29. Important prices, important areas are almost always tested. What that means is once an alert is triggered, there is a greater probability of it triggering multiple times than not triggering multiple times. So on this first drop from 74.29, we dropped down to basically 23. That's a 6-point move at $50 a point. Price got back above the trigger, dropped again. This time we put in a low at 41.04. Now the alert price was 41. 41.19, as I recall. In fact, let's look at alert 74.29. $74.29. Do a lot of scrolling here to find it. There it is. 74.29. The way you read it, going to be short. 41.19. Initial target 41.17. And then the second target, or potential support, is at 41.07. And the third target, potential support, at 41.03. And then the final trade to target on every short alert is the weekly zone below, and on every long, it's the weekly zone above. And as you can see from the chart, this one did make it all the way to the final target. The entry 41.19 triggered once, triggered twice, triggered 3 times, and that third trigger took us down to the weekly zone at 82/83. We spiked it. We found support here at that fib that I just showed you on the daily chart. Now, again, this low, basically 40.55. If we go back and look at the daily chart, 40.55 is right here, this low. Now, if I scroll back further on the 30-minute chart, you'd see this low, which came in on the 13th. Which would be last Wednesday, I think it was. The 50% gave us this nice bounce up into resistance, which led us back to support. Once the market found support, buyers came in early, back to resistance. Now the market's looking for support, which it seems to have found for the moment at the low of the day. Patience and self-discipline are two of the most important tools in your trading toolbox. Waiting for the opportunity to present itself is critical. We all just, want to click the mouse. Michael this morning had a great morning in the live training room. He was one and done, reached his goal on the very first trade. That's not going to happen every day. You should never expect that to happen. When it does happen, be grateful, humbly accept it, and then go do life, come back the next day, do it again. On the Dow, the CTA on the long side was 34.120. Now, CTAs, as I said, act much like a weekly trading zone. Okay? It can act as an iron curtain, which serves as good resistance and turns price back down. So that's exactly what happened here. We traded down to support, back up to the CTA, resistance, pull back to the BBC, which held. The pullback holds more often than it doesn't. And that led to this rally here. We traded up through the weekly trading zone. Now, only 3 things happen at a weekly zone. Consolidation is the most likely thing. That's what you'll see about 75% of the time. Rejection, that's where the only thing left touching the zone when the candle closes is the wick. And the least likely thing, but it happens, is the slice. Right here, price slices through a zone like it's not even there. When that move runs out of steam, what will typically happen is price will then retrace back to the zone it sliced through, and then continue in the direction of the slice. So we pull back to the BBC. One of two things is going to happen. It's going to hold or it's not going to hold. If price gets below the BBC, we have a window of opportunity. Got to be careful of that little swing low right there, because that's potential support. So the best window would be this one here. Let price get through, because if we dip below it, it might just be ready to trigger again. Okay, so from 34,120 up to the zone, that's 100 points at $5 a point, $500 per contract traded. The high is 372, so from 120 to 372, 150 points, $5 a point. On the Russell, here's that same bullish cross that we saw in the S&P, that we saw on the Dow. Here it is again on the Russell. That same transition. We had a bearish cross, move to the downside. See how those wicks are there, just like it was on the S&P. And then we go into the transition, and then the bullish cross. We get a leg, we get a retracement. The pullback holds more often than it doesn't. And so off we go with a leg and a retracement and a leg and a retracement and a leg and a retracement, which took us up to these highs at 22.36. So this initial trigger here, 22.13, took us up to 22.17. It's 4 points, $50 a point. Back below the trigger, pull back holds. This time we go from 22.13 up to 35. So from 13 to 23, that would be 10 points. So you get about a 12-point move at $50 a point. Both the S&P and the Russell pay $50 a point. The NQ pays 20 a point. The Dow pays $5 a point. So the Russell also back below the BBC. Okay. So this pullback held, this pullback held. This one, we're still in it. The market's still in decision-making mode. Will it hold or not? Okay. We may dip right below. If we do more than dip, then we do have a window of opportunity here from roughly 22.10 down to 22.08. The weekly zone is 2207/08. We've published the weekly zones since December 14th of 2009. Price flows on a 30-minute chart the same way it does on a monthly chart, a weekly chart, a daily chart, from support to resistance, back to support, back to resistance, back to support, back to resistance, back to support, over and over, again and again. It's a never-ending cycle. So the weekly zones are important because we see those as our fixed support and resistance for the entire week. So we see it there. Here's consolidation. This is rejection. And I already showed you an example of the slice. Now from 22.13 again, the swing high was 22.36. So 13, 23, 33. It's about $1,000 per contract move. When you first start trading with us, you should not be trading in your live account because you haven't had a chance to learn the methodology and the strategy yet. Our methodology and strategy is very simple. Michael and Valerie teach you that strategy every morning in the live training room for 2 hours, every trading day, from 9:30 a.m. to 11:30 a.m. Eastern. It's an interactive environment. Michael's putting on and taking off trades. He's explaining everything he does, every move he makes, and answering your questions all along the way. Too often, people try to learn how to trade by just watching a video of someone trading. You're not going to learn how to trade that way. Just as you can't learn how to swim watching videos of people swimming. You can see how much fun it is, but until you're actually in the water, you aren't learning how to swim. You're just learning how to watch people swim. So it's the same with trading. So that's why we use the educational model that we do, where you're able to trade along in your demo account, in your simulator, as you're learning the strategy. Now, once you put together 10 consecutive days in a row in the simulator, where you reach your goal in 10 trades or less, once that happens, our 2420 blueprint will give you the green light to go live with one contract. Just one. You'll stay with that one contract until you increase your account balance by $2,000. Once you do that, the blueprint will give you the green light to add a second contract. The big difference between the first contract and the second contract is the second contract is funded by profits you earned trading one contract. The blueprint will notify you when it's time to add number 3, number 4, number 5. You only add one at a time, and you only add additional contracts with profit you earned in the market. That makes it very difficult for you to blow up another account. Now, I won't say that it's impossible to blow up an account, but you got to break a lot of rules, because once you go live, anytime you hit a rough patch, you have 2 consecutive days in a row where you don't reach your goal, you hit pause on the live, jump back into the simulator, and book a one-on-one mentoring session. All of our traders have unlimited access to one-on-one mentoring, private mentoring. There's the group training every day in the live training room, but when you need help, when you need questions answered, explanations that you aren't able to grasp during the 2 hours every day in the live training room, you can book a private session with myself or Michael or Valerie or Bert, and we'll dig in and help you figure out. We'll walk through each one of the trades with you, get an idea of what happened. Okay? So you start in Sim, put together 10 consecutive days in a row where you reach your goal, and you go live with one contract, and then the blueprint will let you know when it's time to add each additional contract, but you only add one at a time, because you need to acclimate yourself to trading at that level. Trading in Sim and trading live, 2 very different animals. The market doesn't change. The market doesn't know that you've gone from Sim to live, but it certainly seems that way. That's probably one of the biggest questions. Hey, I was killing it in Sim, then when I went live, everything changed. Well, truth is, everything didn't change, but something that you're doing changed. You're either being more conservative, something in the thinking process. And so those mentoring sessions where we're discussing that topic, we have to really dig in and try to figure out what it is you've changed, what it is you're now doing differently than you were doing before. Because again, it seems as if the market knows that you've suddenly switched to live, because now things aren't working the same way they did before. So you've got to keep your mindset exactly the same when you go live as it was in Sim. Now, this bearish cross here, on the first trip back up to a bearish cross that leads to an extended move to the downside, when price revisits that area, we expect that to be good resistance until proven otherwise. So far, it has served to be that good resistance. So the question now is this pullback going to hold? And you might say, well, we're below the BBC. Yeah, but this candle's still touching it. So what I like to see is I like to see a candle actually open and close below the BBC before I switch gears from the long side to the short side. Okay, next is the NQ. And the CTA was 13,556. We had a swing high at 63, which led to this swing high at 70. 56 to 70. It's 14 points, $20 a point. It's $280 per contract traded. Now, once price got above the weekly zone here, we pulled back to the zone, which we expect to be good support until proven otherwise. So it was, and it was, and it was, until it wasn't. When it suddenly isn't, well, then we have to start looking at things in a different direction. When you've got all four of the major indexes on the same side of the street, all four green or all four red, that gives you your best trading opportunities. When the markets are split, as we've seen quite a bit of here lately, traditionally you see them on the same side of the street, but we've seen split markets a lot of late. So once we got below this zone, we got below the BBC, we got below the zone, that's what brought up this logic alert this morning, which was to be short 13, 4 1/4 down to the initial target at 415. That's $200 per contract traded. And then the next target is at 13,400. Now the swing low so far is 13,405 1/4. If we get through that area, then 13,358 is the third target, and then the final trade to target, okay, would be this weekly trading zone down here at 13,298. So again, the entry 13,4 1/4. And the swing low so far is 405, so that's 20 points at $20 a point, $400 per contract traded. If you got out at the exact swing low, which is very difficult to do because we never know that it's going to be a swing high or a swing low until after the fact. And we don't do the woulda, coulda, shoulda things. This is why in the live training room we put on and take off trades in the live market. All of the alerts, all 7,463 so far over the last 146 weeks. Every one of those alerts is a trend trade based on the BBC and the 30-minute chart. And all alerts are issued well in advance of the actual trigger price. So when the Telegram app makes that sound on your phone, tablet, PC, wherever you have it installed, I have it installed everywhere. When Telegram makes the sound, it's not a call to immediately put on a trade. It's a call to go study the alert, study the chart, and see the window of opportunity with your own eyes. Because our goal is not to just give you alerts that you can trade and make money, but to teach you how to find these windows of opportunity yourself based on market structure. Again, price will flow from support to resistance, back to support, back to resistance, over and over, again and again. Never-ending cycle. It doesn't matter if you're on a monthly chart, a weekly chart, or a 1-minute chart. The indicators act as dynamic support and resistance. The pullback holds, the pullback holds, the pullback holds, the pullback holds, until it doesn't. So now if buyers come in and drive this up to the BBC, we would then expect that to behave as good resistance, which would then give us an opportunity to put on another short. Okay. Above the BBC, we're just looking to be long. Below, looking to be short. In the morning, in the live training room, if we used a 30-minute chart, you might get to see one or two trade opportunities per day. So it would take a long time for you to learn the methodology and the strategy. We use a faster time frame, the range chart, the 4-tick range chart. That's not a 4-tick chart. That would be too fast to trade. But on a range chart, that means every candle is exactly 4 ticks tall. And on the S&P, 4 ticks equals 1 point. The same underlying principles drive the alerts that drive what you see in the live training room. The only difference is the time frame, the amount of risk. In the room, we use an 8-tick hard stop on every trade, every market. With the alerts, we use a 30-minute chart with a maximum risk of $300, but we want to risk less when possible, based on market structure and that just simple 3-step method. So if buyers rally us up, we could find, well, we have found resistance at the step line. Buyers can get us through that. Red and falling is the next area for potential resistance. And then the BBC. And on a move up to the BBC, we might even spike it a little, touch the weekly trading zone, and then that gives us an opportunity to be short the market. Okay? All right, next on the list, crude oil. CTA on the long side last night for crude was 62.85. We traded up to 63.85. When the price of crude moves $1, that's $1,000. When gold moves $1 in price, that's $100 if you're trading futures. Silver moves $1, that's $5,000. So a $1 move in the price of crude, 62.85, 63.85, $1,000 per contract traded. From the published entry to the published target. On CTAs and logic, the final trade to target on a long is always the weekly zone above, and on a short, it's the weekly zone below. So what's the high probability move from here? Okay, we've traded below the step line, got a red candle going, so the market found resistance. So what's it going to do? It's going to go look for support. Once it finds support, it's going to go look for resistance. Again, that's a never-ending cycle. It just keeps going and going and going, like the Energizer Bunny. And here's gold. CTA on gold was 1880. We put in a swing high up at 1890. Gold pays $100 a point. When the price of gold changes by $1, that's $100. And so from 80 to 90, it's a 10-point move. That's a $1,000 per contract trade. So both crude and gold offered $1,000 per contract traded based on the CTA. And again, now this good example, we started consolidating at the CTA about 5:30 a.m. Eastern. At 8 a.m., that's when we got the move that took us up to 1890. We've now dipped back below the trigger. We've dipped below the BBC. 1872 is the CTA on the short side. And so the swing low over here was 70 and a half, so it's $150 per contract traded. Swing low over here was 70.6, and here was 70.3. Okay, so between $150 to $200 on each of these triggers. Now it's coming down again. We have to anticipate that the market will once again find support in this area until proven otherwise. Once price trades below this area, then that opens the door for a move down to roughly 1868. If price can trade through that. Next area for support, 1865. And then below that's the weekly trading zone at 1862. On silver, the CTA on the short side, we got rejected on the long side. We never quite touched it. But on the short side, the first drop took us from 74 down to a low at 68. So 68 to 74, 6 points, 2 pennies is $100 on silver. And then we had a minimal drop here down to 27.70. So that's 4 pennies, $200. And then on this trigger, we triggered once and we dropped to 27.63. Buyers came in, got us back above the trigger, and this time we made the entire move from 27.74 to the final trade to target at 27.34/35, which is the weekly trading zone. And so that is a walk through all of the markets and everything that has happened so far this week. With that, if you've been on the trial and you're ready to become a passport holder, which is lifetime access to everything we do, everything we've ever done, anything we might do in the future, you simply go to eminifuturestrading.com. Once you get your passport, Valerie will send you all the information that you need to get going. She'll send you the links to all the different Telegram channels. We have a Telegram channel where all of our traders discuss their trades. We have the alert channel. We have the weekly trading zone channel. We have the concierge trade alert channel. We even have a channel called Breeze. That's where, when we want to just shoot the breeze and talk about things other than trading, we've got a place for that. You install Telegram by going to telegram.org. It's free, it's fast, it's secure. There's no pop-ups, no banners. Telegram's a real blessing. And we use it extensively for just about everything that we do. You have access to support 24/7, 365 via the Telegram channels. So what we do is not just limited to what happens in the room for 2 hours a day, nor is it just limited to when an alert comes out. But whenever you have a question, be it the morning, afternoon, evening, middle of the night, because we have traders around the globe, if you put a question into that discussion group, if you're new, chances are there's somebody logged in somewhere who will provide you with an answer. All of our traders use the same methodology, the same strategy, the same indicators, so everybody's on the same page. It's a great group of folks. You'll be met with a very warm and welcome invitation. So many of the chat rooms and message boards on the internet that have to do with trading can be depressing because people are not making any money. They've been misled. They've been fed false promises. We don't make any promises. We simply teach you everything that we know about trading E-mini futures. We give you the information. We give you the tools. We teach you step by step how to trade using our methodology and strategy. Now, just like I can teach you how to play baseball, I can't promise you that you're going to pitch for the Yankees. We teach you everything you need to know about trading, provide you with the tools to get the job done. But I can't guarantee you that you're going to become the next rock star trader. It's going to take time. There's no get rich quick. You're going to have to put forth the effort. If you're looking for easy money, quick money, that sounds like gambling. Maybe Vegas might be a better shot for you. If you want to actually build a business which is based not on mystery or magic or Wall Street secrets, but on just pure logic, understanding how price flows, knowing where the market is most likely to find support and resistance, and the understanding that price flows from one to the other in every time frame, every market. Everything that we teach, everything that you learn in the live training room or in workshops or in one-on-one sessions, it's fluid across all markets and all time frames. So the journey starts at eminifuturestrading.com. Go there, get your passport. Valerie will make sure that you're all set up and ready to go when the Globex markets open Sunday night at 6 p.m. Eastern. So with that, we will now go to our good word for the day. Yesterday we talked about accepting responsibility. Today we'll talk about your legacy. What will your legacy be? Proverbs 13:22 says, "A good person leaves an inheritance." Leadership expert Dr. John Maxwell writes, "On December 18th, 1998, I had a serious heart attack. That night, as I lay on the floor waiting for an ambulance, I remember thinking two things. First, I was too young to die. Second, I had not completed some of the things I wanted to accomplish. One of the most beneficial outcomes of my heart attack experience was that it motivated me to ask myself, what will my legacy be? A legacy is something we leave behind to the next generation. It can be possessions that we place in the hands of others. It can be principles we lived that carry on beyond our lives. It also can be people who we have influenced, whose lives are better as a result of knowing us. So always try to keep two things in mind. Number one, today is all you've got. Proverbs 27:1. Remember the words on a gravestone that read, I expected this, but not just yet. We all hope for a long life, but none of us knows if we'll see tomorrow. Proverbs 27:1 says, do not boast about tomorrow, for you do not know what a day may bring. And number two, you will leave a legacy. A good man or woman can leave a legacy that blesses the next 2 generations. A good person leaves an inheritance for their children's children, but a sinner's wealth is stored up for the righteous. So focus on being good and doing good, and ask yourself regularly, how do I want to be remembered by my loved ones? When my time here runs out, will I continue to influence others for good and for God? And that's our good word for the day. Thanks so much for tuning in. Whoever you are, wherever you are, may God continue to richly bless you with His mercy and with His grace. And I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading E-mini futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.